Since we're doing covered call ETFs lately with Tesla and OARC, I had a few subscribers reach out wanting to do covered call indexes on the S&P 500. And someone in the comment section listed SPYI. So as we go to our estimated income, we see it's about 1037 here. And I'd like to always add to that, as I say in every video. So SPYI is an interesting idea because it has a 12% dividend. See, it shows here 4%. But let's go do the math ourselves again, because E-Trade is usually late to updating. So $10,000 divided by 47. 10,000 divided by 47. Let's get the exact number, 47.60. 47.60. You get 210 shares, and then multiply that times the earnings per share, which is 0.46. 0.46. That's the dividend yield. Times 0.46 times 0.46, 96 times 12. And you get 11.59. So you have between an 11 and 12% dividend for SPYI. So that's really attractive. I would really like to buy that. I was really thankful that one of my subscribers recommended that to me. So I just want to compare SPYI, and this is a covered call index of the S&P 500. So it buys the S&P 500 companies, but it sells covered calls on the holdings, generates premiums, pretty high premiums, nothing like Tesla and OARC, because these are not, at the S&P is not as volatile as Tesla or OARC. However, it still has pretty good enough volatility to get 12% dividends on the covered calls, which is in line with what we see with competitors. SPYI we have. Let's go look at a competitor, Madison Covered Calls, MCN. One of my favorite funds. I used to own this fund quite a bit, and it has about a 9% dividend, and it's quarterly, not monthly like SPYI. So I like the monthly aspect of SPYI. Madison's been out a little longer, so has more of a chart to compare against here, and it stayed pretty steady at around $8. As you can see, $7.92 is the current price. It's stayed in a range between probably 7 and 8. As we look in the chart here, you have 750 and 8 since October. I mean, since August, 750 and 8 has been the range. So while the market's chopping around, this is just paying you a safe 9% dividend. I think it's 3-star rated on Morningstar as well, so that's pretty good. Now, I'll tell you why I don't own MCN. It's because it doesn't have much capital price appreciation. As you can see, it goes sideways, and the dividend isn't enough for me to get excited. I prefer the dividend of SPYI. And by the way, here's SPYI, pays monthly, has an expense ratio of 0.68, sells covered calls. See, it generates income from a data-driven call option trading. That's kind of interesting. They use data, perhaps some AI, to do their calls, their cover calls. And then you have closed-end fund Madison, which is here next to it. And you can see the top 10 fund holdings for Madison. I mean, Transocean, actually. I thought that was in the S&P a long time ago. I didn't know it was still in the S&P. I'm not sure if Transocean's in the S&P, but yet it's a top 10 holding for Madison. It's not a bad bet. Transocean's been doing well, but I'm not sure that's in the S&P anymore. Let's check really fast. I always run it through the ultimate test here, rig for Transocean. I don't believe it's in the S&P. And as you can see, it's not. Not that I can see. One more time, rig, R-I-G. So it appears as if Madison has some holdings in it that are not in the S&P, and it tries to do its own stock picking, which a fund with its high rating over the years, maybe it can afford to do that. But for me, I don't like the dividend. Like I was saying, I'd prefer a bigger yield, and I prefer SPYI. Now, here's why I don't buy SPYI right now, because the market's going to open in 4 minutes. I'd like to add to my income once again. But I don't buy SPYI because it has a high maintenance level for me that I can't afford to have because of margin. See the maintenance level here, even though it shows 4%, I don't think that's accurate because we just did the math. It's 12%, just like the website says. But 50% maintenance. So it's like Tesla and OARC. It's, you know, but those are considered risky, Tesla and OARC. That's why they're 50% maintenance. This shouldn't be risky when it's the S&P and it's a covered call strategy. And I've seen a couple of indexes like this. I think it's XYLD. It's another covered call index for the S&P, XYLD, which I also like, and it's by Global Funds. And it has a 12.5% dividend, kind of like SPYI, but look at the maintenance. Again, it's 50% maintenance. So for me, it takes up too much equity for too little dividend. Okay, if I'm gonna take up 50% maintenance, again, like in Tesla or OARC, I'm gonna do it in a fund that pays me a big enough dividend to cover my margin interest, which is about 15 grand a year since it's 300,000. See our margin down here of 280. Just say 300,000 times 10% margin, that's 30 grand interest. And I have a 5% margin rate since I negotiated it down multiple times, which you can do too. That's going to be about 15 grand a month in interest. So if I'm going to do 50% equity, I want it to pay me, because this number up here, this 100K, has to stay large enough to avoid margin calls. I like to keep it comfortably around 100, as you've heard in other videos. During the SVB fallout, it got to about 70 and it was dangerously low. And so I couldn't have bought an SPYI or XYLD, even though I wanted to buy the S&P, because it took up too much equity at the time. So I'm staying in these cornerstone funds, CLM, CRF, because they cover the S&P and NASDAQ, but they pay 20% dividends and they're 30% maintenance. Same for these other funds at the top, JEPI, USA, BDJ. They're all 30% maintenance and they're top quality funds. So I'm putting a lot of my allocation and weighting into these lower maintenance funds. So again, love SPYI, love MCN, I love XYLD. I like the idea of a sideways mover that has a safe 10 to 12% dividend, since its holdings are top quality in the S&P 500. I just don't like the maintenance. So before we close out this video, we're going to check out performance and value as we always do, so that I can prove to viewers that this strategy is working out. So we're now beating the NASDAQ. NASDAQ 16.7 and we're up 16.6. Yesterday, we were down a few grand towards the close, and you didn't see that because I didn't get a chance to get that video out in time on OARC. So, and then I promised a reader that I would do the comparison on SPY and these other S&P 500 cover call funds. So I didn't get a chance to do that. I'm a little behind on my videos, and I'm getting this out today. Let me know what you think of SPYI and XYLD. If you think there are any other cover call indexes that might be better, or perhaps maybe you know of some cover call indexes that have lower maintenance, because I need the low maintenance, as you know, to run my margin up, because I believe if you don't use margin, you won't get ahead. See, look at my performance in the account on a 3-year basis. And you can see that we're up almost 400%. We were up 400%. Now we're up about 300%. And we're dwarfing the market, okay, because we're using margin. You have to use debt, in my opinion, to get ahead. You have to use debt. How do all the great corporations get ahead? They use debt. How did even Warren Buffett and the great investors get ahead? They use debt. They use loans from their parents and all kinds of areas to get ahead. So we're down 1,500 today. I wanted to make sure the market opened, and I just wanted to show you we're down 1,500, but 0.24. So let's see, is that in line with the market? The Dow's at 0.8, NASDAQ's down 0.35, S&P is down 0.12. So we're down 0.25. That's in line with the market. We're beating the market. So we can't, even though we're down 1,600 or whatever we're up or down, we can't ever look at that. We have to look at the percentage. And these earnings of about 104,000, which should increase now because I added to more OARC this morning before the bell. So now that's 104.5. Because I added to OARC on the heels of that video I made yesterday. I believe in having 5,000 in OARC, since it's a fund with a basket full of stocks versus Tesla, which is just one stock, plus OARC has Tesla in it. So you're getting best of both worlds with OARC and having 5K in that. But to my subscribers' points who wrote this last night, you won't get as high of premiums in OARC as you would in a Tesla. So that's it for the video. That should do it. Let me know what you thought about it in the comments section below. Thanks a lot.